Wednesday is the most important day of the financial week. The July Consumer Price Index releases Wednesday morning. Economists expect headline inflation at 3.4% annually and core inflation at 2.5%. The Producer Price Index follows Thursday and retail sales data on Friday. Why this specific CPI report matters more than usual. The Federal Reserve is divided. 3 members voted to raise rates at the last meeting. The rest held. The central bank's renewed focus on inflation means officials could be compelled to start tightening again by hotter than expected numbers, or even ones in line with expectations. The economy just shed 23,000 jobs in July, which would normally reduce the urgency for rate hikes. But the Fed's focus has shifted decisively to inflation. A cooler than expected jobs report reduced the pressure for an imminent hike, but the CPI is now the key data point. The 3 scenarios and what each means for your money. Scenario 1. CPI comes in below 3.4%, rate hike fears ease immediately. Markets rally, bond yields fall, mortgage rates pull back. High-yield savings rates begin to face downward pressure eventually. The best outcome for borrowers. Scenario 2. CPI comes in at exactly 3.4% as expected, mixed reaction. Some relief that it did not surprise higher. Some concern that inflation remains well above the 2% target. Markets likely react modestly. Scenario 3. CPI comes in above 3.4%. Rate hike fears surge. Markets fall. Bond yields spike. Mortgage rates push toward new highs. September rate hike probability rises significantly. Deutsche Bank will be watching specifically for price movements in recreation goods, medical care, hotels, airline fares, and signs that recent price increases in memory chips are beginning to feed into consumer electronics prices. The memory chip and consumer electronics angle is directly relevant to anyone buying technology. AI chip demand has driven memory chip prices sharply higher. Those higher costs are beginning to appear in the retail prices of laptops, tablets, and phones. Wednesday's CPI may be the first report to clearly show this AI-driven technology inflation feeding through to consumer prices.